Hey, Mark back with you for my next training video. And this is one of my favorites, and this is learning the snowball fortune effect, secrets to compounding your passive cash flow. I hope by now you've watched the first two videos that I released, including the one from yesterday where I showed you how to start creating passive income with fractional investing in real estate. With no additional effort, you can rapidly increase your investment and cash flow just using the power of time and a little bit of patience. The two key components to this are compounding and dollar cost averaging, which I want to talk about both and why putting these both together is so powerful. Albert Einstein has been credited saying compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it. There's a little bit of dispute whether he actually said this or not, or these exact words, but it doesn't limit how powerful and important this statement is. Let me put up the risk disclosure because we will be talking about investments and there's always risk of loss with every investment that you make. So what is compound interest? The way I want you to think about it is compounding in investing is like a snowball that rolls down a hill. At first, it's really small, but if the hill is really huge, really big, as it rolls, it picks up more snow and gets bigger and bigger. And the snow it picks up also starts collecting even more snow. That's compounding. When this converts to investing, it means you invest money, it earns a return. It can be a modest percentage that you're earning from interest or dividends. That return starts to earn its own return. So over time, this can lead to more and more money, and it starts to grow faster and faster the more time that you give it. So on the screen here, I want to show you something. If you started with an investment of, let's just say, $10,000, it could be 1,000, it could be 10,000, it could be 100,000. It's always going to be the same percentages. Let's say you're receiving 10%. After the first year, with a little bit of compounding as well, you've earned over $1,000. It's already starting to earn more than the 10%, because 10% would be what? $1,000. So after the first year, you've earned $1,047. And then year two, you earn more money, not just the original $1,000, not just the $1,047 in year one. Year two, it's $1,143. By the time you get to year five, that same $10,000 is earning every year $1,500. By year 10, almost $2,500. That means the earnings themselves grew 2.5 times. And what did you do? You did nothing extra. It's just because the interest that you were making also started to earn interest on top of it. That is your snowball fortune effect. Now, what does that do to your account? If you started with that $10,000 account, after 10 years, that same $10,000 account is now a $26,000 account. After 10 years, you would have grown your account over 2.5 times. And if that investment was passive, you had zero work over those 10 years. That's the power of compound interest. It's like a snowball rolling down the hill. This is a graph, as you can see, of your account just growing for doing nothing else than starting with 10,000. If you started with 100,000, it's worth over $250,000 after those 10 years. How would you really like to turbocharge that plan? That's impressive, but we can really turbocharge it. The way you get parabolic is you add in dollar cost averaging. So what is dollar cost averaging? You may have heard of this. If you haven't, it's just regularly adding more snow to your snowball as it rolls down the hill, regardless of the weather. When it comes to money, think of it this way. You're investing a fixed amount of money at regular intervals. No matter if the price of your investment is low, is high, every single month you add a little bit more to that investment. Then, if prices are low, let's just say the stock market is down or the real estate market is down, all that ends up happening is you get more shares when prices are down. And when prices are higher, you just buy a little bit less. You can combine the power of compounding and your investment can grow even bigger and faster. Let me show you how this is possible. So let's just say you started with that original $10,000, but now you're going to start adding just $500 extra per month. Before you grew 2.5 times. With just adding the $500 per month, that dollar cost averaging, you grow 15 times over the 10 years. That $10,000 after year two, $26,000. If you remember, when we weren't dollar cost averaging, it took 10 years to get to $26,000. After 10 years, you were making about $2,500 a year in interest. This one actually gets there in 2 years. By the end of 10 years, your account has grown to almost $150,000 and it's spitting off $15,000 in cash flow. This literally is the turbocharge. The math is always the same. Even if you start much smaller, you start with $500 and you add $50 per month, you're still going to get the same growth at a 10% annual rate. So I mention this because so often people feel that they need to make all kinds of returns. I need to make 100% a year, 50% per month. At a very more modest annual return, you still can have all of the benefits of fast hyper growth in your cash flow. Take a look at this. The line down below, that was my first example, but you add dollar cost averaging, this is how we get parabolic, right? Now we're making an order of magnitude. All it takes is small, consistent investments, and it does wonders to returns. Let me show you an example, a real life example. All right, on the screen here is a stock symbol. It's SCHD. It's the Schwab US Dividend Equity ETF. All right, this is just a basket of stocks that tend to pay regular dividends. And you can buy it just like a stock on the stock market. It's about $73 a share. Today, you can buy one, you can buy 10, you can buy 1,000. There's $48 billion invested in this ETF. So you can buy as much as you want, and you're not going to impact price at all. It's going to hold very well-known companies that pay what's called a dividend. These companies are paying regular dividends to shareholders, but rather than having to buy all these stocks individually, you can own this basket of stocks. And over 10 years, it's made 118%. If I divided it up by 10 years, that would be 11.8% on average. And that's with dividends being paid by all those companies, plus those companies just growing in size and you making money off of that growth. If you started with $10,000, you didn't contribute anything a month, so no dollar cost averaging. But in this case, let's start with 10 years. All right, and we made on average 11.8%. So I'm going to calculate what will that be worth after the 10 years. So that $10,000 initial investment is worth $32,000. It's over tripled for doing absolutely nothing. It's 100% passive. Now, past results don't guarantee future performance. It could even be better. What if you gave it 30 years? This is probably going to blow your mind. Over 30 years, that same $10,000 investment turns into $338,000 by adding nothing more than that first $10,000 investment. This is what I call going parabolic. You get to a point here where you're making literally every year $20,000, $30,000, $40,000, way more than your initial investment. From this year to this year, it grew almost $30,000. 3 times what the initial investment was. This is 100% passive investment that I just showed you at CHD. No work, no effort on your part. What if you actually invested $500 per month? Let's go back to the 10 years. So you start with 10K, you add $500 a month. Before it was about what, $32,000? It's now $146,000 completely passively. But what if we said 30 years? This is why I say you have to start as soon as possible. 30 years, that turns into $2 million. All we did was start with $10,000. We added $500 per month at that 11.8% interest. And through the compounding dollar cost averaging, it turned into $2 million. That was $190,000 total all in after 30 years, worth over $2 million. Now, look, you might say, hey, I've only got $2,500 to start with, and I have $200 a month that I can put in to passive investing. Let's see what happens with that. It's almost $750,000 after the 30 years. That is the power of compounding and dollar cost averaging. You may find over time that you can start to add more money, and then look what happens just by adding from 250 to 500. It didn't go up a little bit. It went from 750,000 to 1.75 million. So you can see how powerful these two concepts are. This is the power of compounding and dollar cost averaging, in particular if your investments can be 100% passive. Then you have no work, no effort. That's why I say this is investing once and earning forever. And the rewards are truly exponential. It just takes some time and a bit of patience. Now, I want to give you a bonus tip here. Maybe you have some cash sitting around right now. It's not doing anything for you. It's simple to start compounding right here today. And it's not going to start until you make the first move. What I suggest everybody should do is get a high yield savings account. We're very fortunate right now that interest rates have gone up dramatically. Now, look, it doesn't help if you're looking to finance a house or a car, but at least take advantage of it on the other side of the equation. So what I want you to do is go to a website. It's marcus.com. I'll show you the website in a moment. It's owned by Goldman Sachs, one of the largest money managers in the world. They're actually even paying more now. When I made this screenshot here, it was 4.15%. Now it's 4.3%. It's super simple to transfer money into Marcus. So there are no fees. There's no minimum deposit. You can start with $100 and it is free passive income. I have used it over the last couple of years. I've moved money in and out. You just log in and you need to withdraw the money because you need to use that cash. It's really easy to do. And when you want that money earning interest, you go ahead and just transfer it into the account. All you need to do is go to marcus.com and you'll start making passive income. I realize it's not the highest return, and I'm going to share ways you can make quite a bit more than that, but talk about an easy way to at least start having your cash work for you right now. Investing, look, can be made really complicated. For a lot of people, this is what their investing looks like. It's highly complicated because it can be. It can be as complicated as you make it. And there's so many different directions that you can go. I would love for you to really just simplify things and have a lot of your investing look just like this. Focus on compounding, dollar cost averaging, cash flow, fractional investing, and passive investments. All right, so what is next from here? Make sure you watch training video number 1, number 2, and number 3, where I laid the foundation for a variety of different passive cash flow income opportunities. And then definitely join me. I'm going to be holding 2 free live webinars next week from when I'm recording this on Wednesday, August 23rd. You can choose from either 12 p.m. Eastern New York time or 6 p.m. Eastern New York time. I'll share the links to get yourself registered for free in just a moment. And I'm going to reveal how I personally generate my own 6-figure income using passive investments, following the exact same formulas I've been sharing with you over the last few days. The links that you can use to jump to the registration pages are on this screen. The first one, of course, at getnetpicks.com/PIA 12 p.m. That'll get you registered for the 12 p.m. Eastern, 9 a.m. Pacific, or getnetpicks.com/PIA 6 p.m. You've got your 2 choices there. No obligations to register and attend. Attendance is free. So jump in. I'm going to share additional strategies with you and opportunities for you to be able to copy the formulas that I use in my own passive income investing. And then if you have any questions at all about this video, compounding, dollar cost averaging, or any of the prior videos, please leave a comment down below. Let me know what the biggest breakthrough or aha moment is with this. If it's something that you personally pursue on your own, haven't thought about it, anything that comes to mind, go ahead and comment down below, post below. And I hope to see you in the webinars on August 23rd at 12 p.m. or 6 p.m. So I will see you there. Thanks, everybody.